Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Trump threatens to slap 25% tariffs on South Korean goods, accusing Seoul of dragging its feet on last year's trade deal. Markets shrug off the noise, with Asian stocks hovering near record highs and currencies steadying. And precious metals continue their extraordinary rally, with gold powering higher, fueled by the debasement trade. Well, it's just gone 9 a.m. across the Emirates. I'm Johanna Bersetchi in Dubai. Before we get to markets, as we usually do, I'm going to bring you some of the headlines from December new car registrations in the EU. So just to give you the overall numbers, the total December new car registrations have risen 5.8% to 963,319 to be precise. Over the period from January to December, i.e. for the full year, new car registrations were up 1.8%, so positive signal. We're getting individual country breakdown. Very interesting to note that BYD, Chinese manufacturer, up 167% in December. That's really quite remarkable. Compare that to Tesla, which saw its own new car registrations fall by 32% in the same month. So you are seeing the Chinese EV makers quickly catch up with the likes of Tesla. Tesla continues to lose ground in Europe. And then you can see some of the other European automakers as well, Volkswagen, Mercedes, healthy growth too. So the numbers broadly positive coming out of these EU car sales. As for broader markets, well, let's switch on and take a look at some of these key indices and how they're faring. S&P futures above 7,000 again, so about 0.3% firmer this morning. So risk-on attitude is coming back again, perhaps moving away from some of the events over the weekend. But of course, we still got the Fed to watch out for this week, a possible Fed announcement, though it looks like it will probably happen in the next couple of weeks, about who the Fed chair's successor is going to be. And then Friday, possible shutdown. So don't forget about any of those things, in addition to some of the big AI names and tech names reporting this week. Asia Pacific also up 0.6%. So again, they're also shrugging off news of the extra tariffs applied on South Korea. We'll talk about that in just a moment. The USD seeing some stabilization, but of course down about 1.4% over the past week. It has been a week of declines, not a positive start to the year for the greenback, as we were talking about yesterday on the show. Today, some stabilization, however. And then silver, very much in focus. Today, up 4%. What a whirlwind it has been over the last 24 hours. At one point yesterday, I believe we were up 14%, and then we dropped all the way down again. But the point is, silver, gold, money keeps going into that space. Yesterday, we were talking about gold breaking through $5,000 for the first time. Silver up at $108 this morning. And switching over, I also just want to flag, I'm sure you've seen all of those images of the very cold snap of weather that's passing through the United States right now. Take a look at what's happened to natural gas. We have rallied 70% in price over the course of the last few days. So a massive spike upwards. It was not that long ago that we were trading close to around $3 per $3 million per bank. I forgot the term. Anyway, the equivalent of $3. And right now we're trading closer up to 6.6. So we've rallied almost 100% in nat gas space. And you can see that vertical spike. That is the impact of the weather on natural gas in the U.S. Now let's go back to our other top story. President Trump has threatened to hike tariffs on South Korea to 25%, accusing Seoul of dragging its feet on implementing last year's trade deal. Posting on Truth Social, the president says the levies will increase on autos, lumber, farm, and all other reciprocal tariffs. But South Korean assets are largely shrugging off the tariff threat. Winnie Su is in Hong Kong with more. So walk us through the price action today in some of these South Korean indices and the fact that actually there's green on the board, surprisingly.
Yeah, morning, Jomana. It was quite interesting how we saw this really showed in the Asia session today, because Kospi basically took a big U-turn and up about 2% right now after having actually lost about 1%. And you're seeing that investors are pretty much brushing off these tariff threats. They still see this as part of that negotiation tactic from Trump, and that they see this also as a good dip buying opportunity. However, However, a Korean won here is still under a bit of pressure here, weakening about 0.5%, as investors told us that they're expecting a bit more pressure on the currency space versus equities because of Trump's agenda of a weakening dollar and also expecting strengthening of the Asian currencies. When it comes to stocks driving those gains in the Kospi, actually it is the chip makers in South Korea, including SK Hynix here, up about 7%, and that is actually taking it to its heading for its highest close level later today. And that is driven by a local report saying that actually SK Hynix is that solo supplier of HBM3E chips for Microsoft's new Maya chips. Back to you, Jumana.
Winnie, thank you so much. Well, let's get the political angle of what's going on and get out to our Deputy Managing Editor, Balazs Pans, for the latest. So what happened? Why did President Trump decide to once again raise tariffs on South Korea?
It's a bit of a surprise, Jumana. So overnight, Koreans woke up to this message from President Trump saying that he will enact another 25% tariff on Korea because he thinks that they are not acting fast enough in terms of enacting some of the parts of the trade deal that they struck last summer. Specifically, this has to do with this bill that would allow the Korean government to authorize some of the spending, some of these investments that were part of this deal. They earmarked about $20 billion of Korean investment into the U.S. for this year, and looks like there hasn't been enough movement on that, at least to President Trump's taste. Now, of course, the Korean side was quick to say that they still want to honor the agreement. They're in the process of selecting investment targets. They called a meeting of top-level officials in Seoul today, and they are seeking a meeting with Commerce Secretary Lutnick in the next few days to try to smooth things over. But doesn't seem like, much like the markets, as we heard from Winnie, it doesn't seem like the Korean leadership is panicking over this. They still see a chance to kind of smooth things over and move forward with that trade agreement.
Yeah, Balazs, thank you so much. It reminds me of an article I read this morning from Bloomberg Economics. They looked at all of the various tariff announcements that's come through from the Trump administration. Only 20% of them actually get implemented and followed through. So maybe that's one of the reasons why the Kospi market is just looking through the threat this time. Thank you. Well, Asian stocks are hovering near record highs, and currencies have steadied today as markets regained some stability following speculation over possible yen intervention or yen intervention. For more market insights, Ryan Lemand, CEO and co-founder at Neovision Wealth Management, joins us from Abu Dhabi. Ryan, always good to chat to you. I believe it's the first time we've spoken this year, so Happy New Year to you. There's a lot to unpack here, but maybe let's just start with the fact that there's been a lot of geopolitical headlines at the start of this year. Once again, tariffs coming in focus this morning. But it really feels as though markets have the ability to look past a lot of those headlines and really focus on key drivers, including monetary policy and earnings. Why do you think that is the case?
Good morning, Romana. Great to be back. Thank you for having me. Well, markets have become a bit resilient because they've gone through Trump 1.0 and now Trump 2.0. Obviously, Trump 2.0 dwarfs Trump 1.0 with everything that is happening, the announcements, Greenland, tariffs, etc. But as you said, when we used to open our Bloomberg terminals, Trump 1.0, the first thing we used to look at are Trump's tweets. Today, we do the same thing, but today we take it a bit less seriously because, as you rightly mentioned, less than 20% of the things he announced actually goes into effect. However, we remain extremely cautious and nervous because we're really afraid that something goes into effect that could seriously hinder markets or international geopolitics. The weaponization of trade, banking, finance, and the US dollar have had a detrimental effect on the US, and we're always afraid of an action that could be, again, detrimental.
Yeah, Ryan, in our conversations last year, you were a bit skeptical about the extent of the AI rally. And you, again, look at the playbook this year. And even David Solomon was just speaking to our colleague there, talking about a possible broadening out of the rally. And yet you look at the biggest drivers of the S&P this year, it's still the tech names. And actually, this year, what you're seeing is memory chips as well are having a great run, a great start to the year. Do you expect that to change?
Well, Jemina, in our conversations early 25, mid 2025, I've been negative on two things: US dollar and US stocks. S&P 500 in 2025 has gone up by 18-19%, while the US dollar has dropped by 9%. The US S&P 500 has been one of the worst performers among developed markets. If you look at Nvidia and a few tech stocks, they've been relatively going sideways the past 6 months. So it's unimpressive. Now, what is positive is the Russell 2000. So the rally in the Russell 2000, in our opinion, signals broadening of that rally, and it's something more positive because we as institutional investors were not very concentrated in our portfolios. We diversify, and we cannot just focus on tech. We have to focus on everything else, and that's why we've been negative on US stocks. Today, with the broadening, with the Russell 2000 starting to move a bit, this is quite positive for US stocks, so we're cautiously observing it. As for tech, well, Nvidia is 186 going sideways.
Yeah. Okay, clear on that point. One other question for you. We're eagerly anticipating the announcement of who the next Fed chair is going to be. Rick Rieder has massively moved up in betting odds over the last couple of days. And he was not the front runner a couple of months ago. Do you think that will be well received by the market? And if so, why?
It's very hard to say. We were sure about previous candidates, and now we're not sure anymore. So I prefer to be very cautious there. What I'm sure about is that President Trump will select the candidate that will implement the monetary policy that he wishes to support his administration plans, strategic plans. And this is a very relaxed monetary policy, reducing interest rates, etc. And that's obviously very positive for markets. Will it be positive for the macroeconomic backdrop of the US? I'm not so sure. So again, regardless of the name, what I think President Trump will choose is relaxed monetary policy.
Okay, Ryan, to round things up, I also want to ask you about the big story of the week. That is the price action in dollar-yen and the fact that there is really high anticipation that some form of job owning or intervention is going to take place. How do you see the outlook there? We've seen a massive repricing of Japanese assets, be it in JGBs and in currency space over the last couple of weeks. Are these intervention attempts going to be successful?
So this is one of the rarest times where we see that the Japanese yen pricing Japan rather than pricing US dollar. So today the Japanese yen, I think, is reflective of what's happening within Japan, where the Bank of Japan is very reluctant to intervene because all of the assets that are held by the Japanese Bank of Japan and by Japanese investors abroad, and particularly in the US. And second, you have the carry trade. So if the Bank of Japan actually raises rates because inflation is going up, and rightfully so, they have to intervene, this will affect all of these capital exporting activities of Japan. And that is why today, I think holders of the Japanese bonds are quite cautious, are afraid that actually the Bank of Japan will not intervene. And this is why they're selling it. So we've seen a Bloomberg news story about the US buying Japanese yen a la 1985. And I think this could be quite dangerous for all of these capital flows happening between Japan and the United States.
Ryan, always good to chat to you. Thank you so much for joining us today. Ryan Lemand, CEO and co-founder at Neovision Wealth Management. Okay, we're getting some earnings coming through from some of the key Saudi banks. So let's start with SNB, Saudi National Bank. Full year profit has come in at around just over 25 billion riyals. The estimate was 23.69 billion riyals. Full year impairments 1.03 billion riyals. Operating income coming in at 39.2. But so far what we're getting for the profit is that it is a beat versus the estimates. So that is the picture for Saudi National Bank. And you can see over the course of the past year, it is up 25%. As for Al Rajhi as well, also reporting this morning, third quarter profit is full year profit, I should say, coming through at 24.79 billion riyals versus estimates of 24.51 billion riyals. So a little bit of a miss versus expectations. In terms of full year EPS, we're getting 5.85 riyals. The estimate was 5.85, so in line with market estimates there. Operating income, 39 billion, just slightly above versus estimates of 38.5. So on the top line, we are seeing a bit of a beat. Full year impairments also in line with estimates, coming in at around 2.32 billion versus estimates of 2.31 billion. So what we got is a beat on the top line and then a small miss on the bottom line. That full year profit coming in at 24.79 billion reals versus estimates of 24.51. And coming up, the European Union and India have concluded negotiations on a free trade agreement. More details on the trade pact next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. The European Union and India have concluded negotiations on a free trade agreement. European Commission President Ursula von der Leyen is currently in India to meet with Prime Minister Modi as investors await more details on the deal, capping almost 2 decades of negotiations. It's taken a little bit of time. For more, we're now joined by India government reporter Sudhi Ranjan Sen. So we finally have a deal. What are the details of this deal and why is it so significant?
Well, I mean, as you said, I mean, this has been long in the works, and it's finally, it's across the line. What we are likely to see is an announcement of conclusion of the deal. Signing is still some way away because it needs legal scrubbing. What it would do is that 90% of trade between India and EU, tariffs are going to, drop drastically, and that is going to, bring in a new buoyancy, a new momentum in the trade between the two countries. Of course, the backdrop of this trade deal is why it makes it very important, and the backdrop is the world order in completely upended because of US policies, and that is one of the biggest triggers for both of these to come together and get this deal done and push it across the line. So that's the importance of the deal. And very tricky issues now seem to have been, resolved amicably, such as steel, such as carbon tax. Sorry, and all these issues are now, now all sorted and sealed, so to say.
Yeah. So it's not just economics and exports. There was also an angle around a proposed security and defense agreement. What do we know about that as well?
There is a security and defense agreement that's also in the works, likely to be announced, and from the background briefings that we have had, the reporting that we have done, it's going to be announced today. That's the understanding, that's the expectation. Now, what it does is it sets up a framework between the two, entities, so to say, and therefore it will help companies, it will help, to jointly produce, jointly develop. Although much of those decisions still will be up to individual states in the European Union and also to individual companies. But this sets up a framework, this sets up a template, and that is going to ease in a lot of this. And again, there is a background to it. India is widening its defense sourcing away from Russia, which while is the still biggest supplier, India is moving away. And recently we have reported that India wants to build submarines with Germany. That's a multi-billion-dollar deal likely to be announced soon. Similarly, India is looking to make fighter jets with France, again a multi-billion-dollar deal. So all these things which are in the works just will get facilitated by this agreement.
Sudhi, thank you so much. And as you say, it has been a long time coming, so it's good to see some developments in the space and more details on exactly what that trade deal looks like. Sudhi Ranjan Sen, Bloomberg reporter in India. Now, coming up, PwC is said to resume work on pitches to the Saudi PIF after the ban ends. We'll have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Bloomberg has learned PwC executives have asked teams to resume pitching for work with Saudi Arabia's wealth fund as a one-year ban comes to an end. The ban temporarily prohibited the consulting firm from advisory and consulting services contracts with the Saudis' PIF. Let's get more now with Bloomberg's Omar El-Shmouri. First of all, I can't believe it's been a year. I don't know where this year has gone. What sort of an impact has this ban had on PwC?
Good morning. So to put this in context, the PIF has been the entity anchoring Saudi Arabia's economic transformation drive, and that has resulted in a boom for consulting services across the region. So PwC, for instance, made about £2 billion in the fiscal year ending June 2024. That was a 26% increase from the year before. They were projecting similar results, but then the ban put a dent into these, trajectories of growth, and it also came at the backdrop of a broader slowdown in Saudi that has affected the industry. So as a result, they've laid off about 1,500 members of their staff, including 60 partners. So that was quite a blow.
Wow, okay, that is a substantial figure, so it's clearly had an impact on PwC. Do we have a better understanding of what exactly happened in order to understand how the issue was resolved?
Right, so they haven't officially disclosed, both parties, the PIF and PwC. We know that PwC's global chairman, Mohammed Kandeh, flew to Riyadh for meetings with the PIF to resolve the issue, but nonetheless, they still had to complete the year. So as of last week, we learned that they've resumed pitching to the PIF, and they've been investing quite heavily in the kingdom in terms of localization drives and talent training programs, as well as moving their regional headquarters to Riyadh, recently opening a very big office in the capital city.
Okay, and what does it more broadly mean for the consulting sector as a whole? And as you say, there's the specific to PwC, and then there's the broader macro going on right now with consulting, where I believe activity has declined quite a lot.
Right, so the ban was definitely a shock to the industry. I think it was a chance for them to review their practices. We know that some bids have become more competitive amid the slowdown, and there are broader layoffs. So I think they need to adapt to a changing environment, which is driven towards more implementation and execution rather than just strategy consulting.
Yeah. Omar, thank you so much for bringing us that story. Bloomberg's Omar El-Shmouri. Well, coming up, we speak to Dawid Heyl. This is the Natural Resources Portfolio Manager at 91 on his outlook for precious metals as the gold and silver rally continues. And that's also driving up the fortunes of some African nations. We're going to be talking about which ones in particular are really benefiting off the rise in the prices of these precious metals. That's all coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Trump threatens to slap 25% tariffs on South Korean goods, accusing Seoul of dragging its feet on last year's trade deal. Markets shrug off the noise, with Asian stocks hovering near record highs and currency steadying. And precious metals continue their extraordinary rally, with gold powering higher, fueled by the debasement trade. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Taking a look at how markets are faring today, some stabilization is prevailing. S&P futures above 7,000, up 0.3%. A couple of things to watch out for this week. We have some of the big tech names reporting Wednesday, Thursday, the likes of Amazon, Meta, so stay tuned for that. The Fed meeting on Wednesday as well. Don't forget, don't expect a lot of fireworks there, but still will be interesting to see whether the commentary around the economy has changed, given the data has been better as of late. And then, of course, Friday, that shutdown deadline. We've got Asia Pacific, the handover mostly positive as well from some of these key Asian indices, including South Korea, by the way, which is a big focus for the headlines today, with President Trump announcing extra tariffs on key sectors, but not the tech sector, which is perhaps saving the Kospi index this morning. The USD also seeing a bit of stabilization there too. We are up 8 basis points, but of course the major theme over the past week has been one of a pullback, with the dollar down more than 1.4%. And then take a look at silver as well. We are back up to $108. 5% higher on the session. At one point yesterday, we were up 14%, pulling back again. A lot of volatility in that space, but overall, just a stunning move already this year in silver and in gold. Yesterday, we spoke about gold breaking through $5,000 for the first time. Silver, too, once again, the outperforming precious metal. We're going to talk more about that in our next segment. But switching over, I'm sure you've seen, all of you, the cold snap that's been hitting North America. And this is the impact that it's having quite visibly on nat gas prices. So prices have dramatically shot up. Look at that vertical line over the course of the last week. That is up 70%. And nat gas in the U.S., the main contract there, is trading just over $6.50 per million BTU. And we were trading sub $3 just a couple of weeks ago. So really dramatic move there, and concerns that if this cold snap continues, it could lead to frozen pipelines and various supply constraints as well. So that's what's happening over there in that gas space. All right, let's also check in on how markets in Asia are faring. Winnie Su is in Hong Kong for us. I was just walking through the handover, which is broadly positive from Asia this morning, Winnie.
Yeah, exactly, Jomana. Like you mentioned, seems like investors are kind of brushing off these tariff threats on South Korea and instead focusing on these upcoming earnings that you've mentioned. Yes, it is going to be a lot from the U.S., but also just to mention that for our region, we've got Samsung and SK Hynix both going to be reporting earnings later this week. And in terms of just how the Japanese market is doing, you can see that for the Japanese yen actually weakening a little bit, pulling away from its recent gains, with investors still a bit cautious on those potential intervention risks. But we will also be closely watching out for these political developments as Takaichi just started her campaign. And also we've got like the 40-year bond auction to come tomorrow. So those will be in focus. But for now, that slightly weakness in the yen is helping Japanese stocks here. The Nikkei 225 up 0.7%, reversing some of its losses from yesterday's sell-off. And in terms of Chinese stocks, actually, Hang Seng here up 1%. We've got those numbers when it comes to China's industrial profits, actually seeing the first yearly increase since 2021 with those efforts from the government's push for anti-involution. Back to you, Jomana.
Winnie, thank you so much. Winnie Su in Hong Kong. Well, gold rising this morning, holding above $5,000 an ounce for a second day, as a weak dollar helped to extend a blistering rally fueled by geopolitical risks and investor flight from sovereign bonds and currencies. Joining us now is Dawid Heyl, Natural Resources Portfolio Manager at 91. Really good to have you with us. I was just looking at the year-to-date. This is just year-to-date performance. So in the past few weeks of January, gold is up 17% already. Silver is up 52% already just in the first few weeks of this year. Is it possible that this momentum can continue?
Hi, Jomana. I think our view at the moment is that the momentum continues. The fact of the matter is that we are, seeing, kind of global shifts that we haven't, experienced in generations, I would argue. Something like the weaponization of the, stockpile of treasuries that's held by Europe and other, kind of regions or nations, where they effectively, at least consider selling those, treasuries to apply pressure back onto the US, for instance. Some of those trends or kind of factors, I think, are going to be driving these precious metal prices even higher.
Yeah, we were looking at a really interesting chart yesterday about central bank holdings of gold. And for the first time, their holdings of gold in aggregate has overtaken their holdings of sovereign bonds. Really interesting to see that happen. How owned do you think gold is and silver by institutional investors? Is there scope for more participants to enter into this space as well?
Yeah, I think that, gold as an allocation to sort of a generalist portfolio manager, is still quite low. Our view is that, it's effectively some portfolios basically hold nothing and others are, maybe a couple of percent. So we're of the view that there's still an increasing appetite for gold as a safe haven. If you just think about the relative sizes of these asset classes, if treasuries and the US dollar used to be the safe haven asset and move away from that, the gold market is a lot smaller. So the kind of the relative size of those safe havens, in our view, is going to be what's driving the move in gold. It's sort of an ancient safe haven, and I think investors are going to continue looking at that.
Yeah, ancient safe haven. I like that. So obviously, we're very focused on the spot price moves. But if you want to get exposure to gold, to silver as an equities player, presumably you're looking at some of the miners. How are you screening for value right now?
Yeah, so we invest mainly in the miners. And so, I think the free cash flow generation at current metal prices are really compelling. That's definitely a focus for us. We think that most of these companies, have got the message over the last 10 years or more, from the last down cycle that investor or shareholder returns is a priority. So we're seeing, good flow through from free cash flow into dividends. Some of it's going into share buybacks as well. So we think that there's a strong return of free cash flow that's going to continue to come to shareholders. And what's also interesting, is that in our view, the generalist investor, has only started to focus on that. I think if you compare gold equities to some other sectors or some other companies, it's very compelling on the free cash flow side at the moment. And the stocks are not cheap, compared to something like the tech sector, for instance.
Interesting. Okay. Let me also ask you about other metals, because it hasn't just been gold and silver, precious metals, but also some of the base metals have really had a good run too, the likes of copper and aluminium. How much of that is just short-lived in nature, some supply disruptions versus, say, more structural, and the fact that there really is a lot of demand for these types of base metals for the transition, for the build-out of data centers and the accompanying infrastructure that goes with it?
Well, certainly a part of the move up in copper and, even base metals like aluminium are driven by the fundamentals. We saw supply outages last year. I mean, one of the biggest mines in the world, Grasberg in Indonesia, actually had an accident, a very unfortunate event, but it basically meant that there was supply outages for a big part of last year, and it continues into this year. So a large part of the copper move, in our view, has been driven by the fundamentals. But at the same time, if we look at probably the biggest demand driver for copper over the last decade or two has been, Chinese consumption, and that looks to be down at the moment. So we do, see kind of a mixed picture for some of the base metals at the moment. The moves have been fundamental, but also exacerbated in our view by something like tariffs, something like defense spending and security of supply as well. I think another interesting commodity is aluminium, where you don't have a lot of supply addition coming on in 2026. And so there's still a demand story that's supposed to be growing at a healthy clip. And so we are quite constructive in that space. Copper might be, sort of under pressure if the Chinese demand doesn't come back quickly. But at the same time, the kind of new economy drivers, such as electrification, is obviously also helping the cause.
Dawid, really good to get your perspectives on the show this morning. Super topical as well. Natural Resources Portfolio Manager at 91. Well, the extraordinary gold rally is also impacting African countries that mine and export the precious metals. The continent's biggest producer, Ghana, has seen its forex reserves swell as well as its currency strengthen. For more, Bloomberg's Moses Mozart Jawu joins us from Accra. I'm guessing the rally in gold is good news for Ghana.
Good morning, and thanks for having me on the show. The gold rally is definitely benefiting the economies of the major gold producers in Africa. Ghana is Africa's top gold producer, and since the gold rally started at a broader pace in the first quarter of last year, It's helped Ghana to build a stronger current account position and bigger foreign exchange reserves. Remember, Ghana is also Africa's second biggest cocoa producer, and it's also an oil exporter. So these other commodities have also contributed. But clearly, if you look at the data, the country's receipts from gold far exceeded any other products. For the first 10 months of last year, gold exports revenue were valued at 15.3 billion, and that was up 76% from a year earlier. The current account surplus jumped to 3.8 billion by the end of September 2025, wow, more than double where they were at the beginning of the year. Foreign exchange reserves at the central bank reached 13.8 billion by the close of last year, enough to cover 5.7 months of imports of goods and services. Now, due to the very supportive external environment, including the weaker dollar, and mainly on the heels of the gold rally, the local currency made its first annual gain against the dollar in at least 31 years in 2025. It appreciated by 41% to the greenback, which was the best for performance globally after the Russian ruble. As part of the impacts on the broader economy, the stronger cedi is helping to curb the cost of living for Ghanaians. Inflation has declined to 5.4% in December, from more than 23%, a year earlier. And the lower inflation has spurred the central bank to cut its benchmark interest rates by a total 900 basis points within just a year to 18%. And we expect the central bank to continue the rate cuts at its meeting on Wednesday. And the improving macroeconomic indicators are set to boost loans growth, to the private sector, meaning that this should lead to faster economic expansion.
It's having really broad impacts. Moses, thank you for giving us all the context on Ghana. And it's really interesting to see how broad of an impact it's having on inflation, even the central bank decisions. But of course, it's not just Ghana benefiting. You have other countries in sub-Saharan Africa also that stand to benefit. South Africa, big one, obviously. Mali as well.
Yes, you might have come across the story yesterday about South African rand rising to the highest level against the dollar in more than 3 years. While a weaker dollar, driven primarily by geopolitical sentiment, has contributed to the rand strength, higher prices of the precious metal, now at levels we've never seen before in the 21st century, is helping paint a more attractive picture of South Africa's external payments position, from which the rand is benefiting. Mali and Burkina Faso are the other two major gold producers in the region, after South Africa and Ghana. The two countries are part of the 8-member West African Economic and Monetary Union, which are united by the CFA franc common currency. Fitch Ratings said in a report in December that foreign reserves accumulation of the countries in the economic union had nearly doubled to $33 billion by the end of October. And that was supported by receipts, including the gold rally. That figure should be looking much better by now, especially after Canadian miner Barrick Mining Corp and Mali resolved their months-long dispute over payments and adoption of a new mining code late last year. Barrick is back to the
something we were following very closely on the show
in the region, and this will further strengthen the current account position of the West African CFA zone.
Moses, thank you so much for joining our show. And I would really encourage viewers to take a look at the article that Moses wrote alongside his colleagues on this topic. Thank you. Moses Mozart Dwazu. Now, coming up, we speak to CEO of Goldman Sachs, Dawid Solomon, on his outlook for this year's M&A activity, IPOs, as well as talent growth. That is next. This is Bloomberg. Goldman Sachs CEO Dawid Solomon sees a slower trajectory for talent growth this year. Speaking to Bloomberg in Hong Kong, Solomon was, however, more upbeat on global markets as a deregulatory tone boosts optimism.
The environment's very constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business.
The stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course, if there was a big exogenous event, it can slow it down. But I don't think that's the base case. But that doesn't mean we won't have some speed bumps along the way this year.
I think Wall Street shed about 10,600 jobs in combined, the big banks, last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall and its headcount. I understand our headcount plan.
Yeah.
And all we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. I point to our wealth management business, which scales with people all over the world.
That was Goldman Sachs CEO David Solomon. Now, coming up, Senegal and Morocco sign new agreements to deepen economic ties, seeking to move past tensions sparked by a contentious Africa Cup football match. We'll bring you the details next. This is Bloomberg. Senegal and Morocco have signed new agreements to deepen economic ties, seeking to move past recent tensions sparked by a contentious Africa Cup football match. The deals aim to boost investment across a range of sectors. For more, we're joined by Bloomberg's Katarina Hodge. Katarina, so talk to us about these new cooperation agreements. How meaningful actually are they?
Well, many of the agreements are MOUs and partnerships with no real concrete details, timelines, or any funding amounts. So the immediate economic impact is limited. That said, they do cover important sectors for Senegal, such as energy, infrastructure, transport, agriculture, and of course, cooperation on ports and highway can potentially improve trade. Morocco is already a major investor and trade partner to Senegal in banking, insurance, and energy. So likely these new agreements will build on real ongoing economic ties. But of course, the real impact depends on the implementation.
Yeah, absolutely. As with any cooperation agreement. Is Morocco a key partner for Senegal right now?
They are. Trade has been quadrupled between 2014 and 2024. Moroccan companies play a major role in Senegal's banking and insurance sectors. Local affiliates of Attijari Wafa Bank and BMC Group are among Senegal's largest lenders by asset. There's also the Moroccan OCP Group, one of the world's largest phosphate and fertilizer producers, that are a key investor in Senegalese agriculture. And this deal comes as Senegal aims to strengthen its partnership with Africa, moving away from traditional partners like France. So absolutely, Morocco is becoming more important for Senegal. And on Morocco's end, they see Senegal as a bit of a gateway into the continent as they strengthen their impact on the continent. So yes, on both ends, this could be like a lucrative partnership.
Bloomberg's Katerina Hush, thank you so much for joining us. Now for a look at some of the other stories we're following today. Zimbabwe's inflation rate fell to single digits for the first time in nearly 3 decades. Annual inflation rate slowed to just over 4% in January, down sharply from 15% a month earlier. Officials say the improvement is a key step towards eventually adopting the gold-backed ZiG as the country's sole currency by 2030. And in the region, Israel says it has recovered the remains of the last hostage held in Gaza after troops located the body in a graveyard over the weekend. The Israeli army says the return fulfills one of the key war goals set by Prime Minister Benjamin Netanyahu's government. Netanyahu's office had said the operation was a prerequisite for potential next steps under the U.S.-backed post-war plan, including discussions on reopening the Rafah crossing on the border with Egypt. And that rounds up our show. Equity futures are pointed to a more positive session. S&P futures above 7,000. Let's see how the day evolves. But that is it for Horizons. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.